How much further has the vaccine trade got to run?
Well, I would tell you this. It's interesting. There's 3 Mondays in a row with consecutive good news on the vaccine front and, quietly some better news on therapeutics. But that's juxtaposed with the increasing caseloads. And I think that at some point in time, when we've seen this happen 3 weeks in a row, where that starts to take hold and we realize that, yes, while that's good news and likely good news for all of us in the first half of next year, the bad news is we're living through the path of the virus getting worse before it gets better. And I think that settles into markets. And I think some of those sectors that have actually outperformed in this sort of vaccine euphoria, travel and leisure in particular, and perhaps some electronic vehicle bid, probably comes out of the market for a bit, and we'll probably have some mean reversion back to where things were settling in sort of end of October, because I think some of the November moves that we've seen, especially in travel and leisure, have gotten ahead of themselves. I certainly think the economically sensitive cyclicals like the industrials, materials, and financials can continue apace, but I certainly think there are other sectors that have gotten ahead of themselves.
All right, so would you be selling the RIPs then, or is this like a time to buy puts, or is this just time to buy something like big tech when you have these days when small caps hit a record?
Yeah, it's amazing how quietly the Russell 2000 has outperformed the S&P 500, and not just in the month of November, and it's a 2x beat, but over the last 30 days. So this has been a trade, while we're talking about it a lot over the last 2 days, it's been with us for the last 30 days. And I think that you need to rationalize what it is that you're looking at. And if you're buying the Russell 2000 right now in small caps in general, because you expect better economic activity in 21, I think there's some logic to that. But if you're jumping onto that trade right now and saying, the best thing to buy are cruise ships and airlines, then I think that you've gotten ahead of what will likely be the recovery in some of that discretionary consumer activity. So to me, we would rather have you balance your portfolio with technology on one side and a barbell approach and economically sensitive cyclicals, but focus more on things like energy, industrials, materials, and financials, and not as much on that, the resurgence of travel and leisure. And I think that's where we're probably the most exposed to overvaluation right now.